Hello, chart watchers and DecisionPoint faithful. Welcome to this Friday, August 9th, 2019 edition of DecisionPoint with your hosts, Carl and Aaron Swindlin. For those of you joining us for the first time today, welcome to the show. And for our regulars, of course, welcome back. All right, it's been a really interesting couple of days in the market. What have you been thinking about as far as this action, Dad?
Where to hide?
Where to hide? Yes.
Right.
I think everybody's been asking for that question for a while. Although I have to say, it looks like gold and bonds are pretty much enjoying quite the rally.
It's hard to figure it out, really. It was just so wild. Things going down and then turning around and going up, and we're talking about gold, bonds, stocks, oil, of course, too.
Yep, absolutely. We'll be covering all of those, including the broad market indexes, those scoreboard indexes. I'm going to highlight the S&P 600 straight shots chart list that you can find in the DecisionPoint chart packs. Just go to your account up in the right-hand corner, and you will be led right to where you can manage your chart packs and get it for free. DP indicators, of course, I'll go over those. And as my dad was saying, big four, dollar, gold, oil, and bonds. And then, of course, my dad's got his grab bag today. So we'll see what you have in your bag of tricks. All right, I'm going to just go ahead and start right off with our DecisionPoint scoreboards. Nothing has changed, I don't believe, since the last time we met on the show. But the most recent signal changes, of course, are here on the short-term trend models. And that just means that the 5-day EMAs had crossed down below those 20-day EMAs. And they did that while they were above the 50-day EMA. So we didn't go into a full sell in the short term, but in all honesty, we don't pay that much attention to the short-term trend model. It does bounce around a lot, but it is interesting to see on the scoreboards. The DecisionPoint sector scoreboard looks the same as it has for quite a while, with energy being the laggard among all of these sectors. And really, I'm not seeing any I don't see that sector perking up anytime soon, unfortunately.
Healthcare doesn't look so great. It's just about ready to switch
to the sell or the
term, yeah.
Yep. Okay, let's go ahead and I'm going to go move us to the charts. Alrighty. So I'm going to start off with our relative chart. So basically this is the S&P 500 here. And then these are all of the relative strength lines. So we're comparing to the S&P 500, each of these indexes. And, really there's not been much to look at here. I'm more interested really right now in this thumbnail. You can see as far as the week has gone, we're losing relative strength in the Dow. We have gained a little bit in the NASDAQ 100 in comparison to the S&P 500. OEX still starting to, relatively continues to underperform. And when you look at the S&P 400, did decline somewhat. And IJR, the S&P 600 ETF, we saw a little bit of a decline as well. It's been trending lower. So, at this point, S&P 500 is leading as far as being the benchmark, with the exception, I'd say, of the NASDAQ 100, which appears to be starting to outperform the S&P 500. Broad market indexes, just looking at the price charts here, we're going to concentrate on the S&P 600. It's really, of course, I think that of all of these indexes, price charts here, I think that is really telling the biggest story here. We need small caps to contribute to a rally in order for it to really sustain itself. And you can see that the S&P 600 has just not even gotten close to its all-time high, whereas we've been making all-time highs, well, we did, on the S&P 500, the Dow, and the NASDAQ 100, all of them. But the mid caps and small caps continue to lag behind in basically trading ranges at this point. Global markets, looking at them at this point, most are in decline still off of their highs from back in January of 2018. You can see that UK is still on its way down with that declining tops trend line. The Nikkei, India is looking a little bit healthier. It did set a new all-time high back earlier this summer. But all of the others are really struggling here. The TSX not looking too bad, but did not make all-time highs back here when we saw it on the S&P 500. All right, let's get a little bit at these daily and weekly charts. Excuse me. For the Dow, all of these are pretty ugly, I have to say, but one of the things I'm going to point out on the other charts and that I'm noticing different, that is different on the Dow chart is we had a close, and you can see it back here, I think, better in the thumbnail, but we had a close below the 200-day EMA. All of those other large cap indexes managed to close above their 200-day EMAs. I mean, the good news, of course, is we did see a bounce up from there. But, you know, seeing that kind of deterioration along that 200-day EMA is certainly cause for concern. I'm surprised we really didn't get back down here and test that 25 to 50 level.
It's not too late to do it.
That's very true. And when I looked at the weekly chart, you know, we've got a rising wedge here, and we this week punched down below it, but we did close above it here. PMO is still in decline, but holding on, clinging to its PMO buy signal. Oh, we don't need the monthly chart yet. NASDAQ 100. Again, you can see it managed to stay above that 200-day EMA, but now it's getting stuck right at that 50 and 20-day, both of those EMAs. PMO had started to decelerate, but it looks like it's trying to accelerate downward again. I'd say probably the only positive here is that we still are looking at a decent rising trend on the OBV. But if we were to draw this a little bit higher, you'd see quite the breakdown, but not a surprise when we would see that price chart drop like it did. NASDAQ 100's weekly chart, not much to say here. It is topped and is moving lower, and we have another wedge on the menu. S&P 100, again, you can see it managed to hold that 200-day EMA and bounce, but struggling to even come close to the 50-day EMA. And you can see the OBV is still, you know, holding on at this point. But again, if I had drawn this a little bit tighter here, you would have seen the breakdown on the volume as we broke down here. Weekly chart for the OEX, and nothing really to report here. Just you can see that it did test that 43-week EMA and managed to close above it. All right, let's get to the meat here. This is the S&P 500. And as you can see, we did hold on to that 200-day EMA as far as the closes were concerned, but we have dipped below on those intraday lows. You know, volume not looking too terrible, but here's a problem that I noted. We did get that nice, you know, gap up and bounce, you know, yesterday, but notice that when we did get another up day following that, we're seeing that decline in the volume. So we had that positive volume, but it was less on the next move up. So I didn't like that. And rising bottoms trend line here on the weekly chart has been broken, as has the 43-week EMA, but we did manage to close above both. PMO is in decline, still has a little bit of room before it hits that signal line for the sell signal. All right, ultra short-term indicators here. I didn't have the results before the show, so I am going to look at them real time here. So there's our volume. There is the S&P new highs. Now this time around today, we had new lows set. And the advanced declining, the volume doesn't look too terrible, but I do note we didn't even get to the VIX didn't even manage to touch its moving average before turning right back down. You know, that's a somewhat climactic reading. I'm not seeing that as especially climactic on the advanced decline volume. But looking at this these two bars yesterday and a couple days before, that one looked like a buying initiation. I think it panned out. But yesterday's really high climactic reading was, I would have been reading that as a likely exhaustion. Of course, hindsight being 2020, I can say that right now. But seeing these climactic readings on the negative side, I think that just bolsters the case that we probably will experience a little bit more decline. Short-term indicators. They've really made a move. We had the couple days here of the move in price to the upside, and the short-term indicators definitely reacted to that and have moved up. They still are not in positive territory. They're more sitting in neutral right now, but we could certainly see them turn back down here, and that would be, to me, a concern, because as I've marked in green, you really want to see these indicators oscillating above the zero line. And if we see these turn back down below the zero line, I think that would be especially bearish. But they are rising pretty nicely here. And our intermediate term indicators had ticked up yesterday, but on today's decline have ticked right back down. So again, usually I don't get too excited about the moves on this indicator until we get the crossovers, and we're pretty far away from a positive crossover here. Both readings are in negative territory. Doesn't really bode well for the intermediate term. All right, here is our DecisionPoint straight shots for the S&P 600. It's part of the Straight Shots chart pack. And like I said, at this point, they are free, so you should go and download them. And we will look at the S&P 600. We call it a straight shot because you start with the index and then you just bang on through all of the indicators that we have pre-done for you. So let's start with the daily chart for the S&P 600. And again, can see we don't have it on the chart anymore, but the high back here has not even been remotely challenged here this year, not even close. We've been in sort of a trading range here, certainly a bigger one between that 880 and 990 area. I think it's tightening up just a little bit here. 20 is just crossed below that 50-day EMA, and it did so below the 200-day EMA. So that is an intermediate term sell signal. Now, if you remember on those scoreboards, currently they're on buys, but we haven't seen a sell come in on many of these indexes, and so I find that especially bearish. And here is the weekly chart. You can see rising bottoms line has been broken. Still closed above it, but notice also we had a top below the zero line on the S&P 600 weekly chart. And this is the monthly chart. And again, you can see that rising bottoms trend line that was broken. And on the monthly chart, we're still sitting on a sell signal. And now we're increasing the margin between the signal line and the PMO. So long-term is not looking very healthy. All right, let's move to the Swindlin trading oscillators. And again, this is just for the S&P 600. And if you recall, when we looked at the same chart for the S&P 500, we had bottoms on them and we got the move up, but not above the zero line. I noticed that these have not been updated yet, so I suspect we would have. I suspect we wouldn't see that jump close to the zero line like we did on the S&P 500, simply because we did lose 1.25% here on the S&P 600 today. So I suspect that's going to turn down well below the zero line. And then here we have the stocks above their 20, 50, and 200-day EMAs. And this is something that we have been watching very closely on the S&P 500. And we're seeing similar problems here. In this case, though, it was more of a confirmation, as we have a declining tops on both the longer term piece, the 200-day EMA and the 50. So really, it's not looking too good. It's nice to see these starting to move up in reaction to that move to the upside. But again, these have not been updated for today, and I suspect they are going to be turning lower. This is the intermediate term, the ITBM and ITVM. And again, these are from yesterday. I apologize, but we just haven't gotten the updates yet. And you can see we had ticked up here. I suspect, though, again, after a decline like we have just seen, that we will end up seeing these indicators even either flatten or turn down. Again, not looking too good here. This is the small caps, new highs, new lows, our breadth chart. And you can see that we actually, now this is, let me just check. Yes, this is updated. So we did increase, and we had a pretty climactic upside move on new highs in the S&P 600. What do you make of that, Dan?
That hasn't updated yet.
It can't have, right?
This one of the new highs, new lows is one that doesn't get a date on it.
Ah, got it, because that does not seem right to me either.
Right.
All right, advanced decline lines for the S&P 600 here. And you can see broken over here for the AD line. The AD volume line, we had a negative divergence prior to getting this decline. Now we'll look at the Mcclellan oscillator and the Mcclellan volume oscillator. And again, some negative divergences here. You know, the summation index I noted moved a bit higher as far as the tops, but if you look at the volume version here of the Mcclellan oscillator, you can see some definite negative divergences, including on the summation index, which also top below the zero line. So I do see that we're really close to getting that crossover there, but not quite. And those are the S&P 600 charts from our Straight Shots chart pack. This is the actual chart list name right there. So I would recommend you just go over into your account. And like I said, there is right down here, manage chart packs. And you can see I have all of ours downloaded, of course. All right. I am going to pass the baton to you, Dad. Let's look at what's going on with the Big Four.
Okie doke. Starting with the dollar. Last week, we got a breakout above this line, but this week it came back into the rising wedge formation and it's consolidated. It's been pretty rock solid right in there through all this fanatic movement here. It's about to cross over, and I'm thinking dollar's going to be moving lower. Weekly chart. One of the reasons it got stopped, I believe, is this long-term line of resistance that goes all the way back to 2008. So it got above it, but it's been pulled back down to it and actually back into it, into the rising wedge and below the line of resistance. Gold is looking fantastic. Here was an important breakout. This is long-term resistance here, and got that breakout let's say in June, and it's been consolidating. Actually, I've been calling it a flag, but it's really rising wedge as well. But we broke out. That should have broken down, but it broke out upward and it's consolidated for the last 2 days after that breakout. Now, we're not getting any bullishness in sentiment on the gold yet, which I'm surprised with the kind of movement we had. Let's take a look at the weekly. So I'm looking at this rising trend line. Now this one, now it's moving away from that. I don't know how vertical it's going to get, but if it gets too vertical, it's going to have to correct, moving back toward this line at least. But it's been extremely good. Gold has been extremely good. And notice that there's been a positive correlation for July, and trying to figure out why that.
Yeah, it's just a little bit positive. So I guess that it's been following closer to the dollar.
Right. So it was positive correlated when the dollar was going up. Oh, let's look at the weekly. No, this is the weekly. I think, yeah, let's go back to the daily. And yeah, there we had, it's been positively correlated, and now it's getting back to where it's not correlate, no correlation at all whatsoever. But I still note that there's a cyclical movement on this indicator, and that I haven't figured out what that is, but there it is. Oil did not do well this week. Did better today, actually. I think Saudis announced they were cutting back shipments to the U.S. For a while, which presumably pushed prices a little higher. I still think this is the here to here, I think, is the main range that we'll see for a long time to come. There's less and less reason for it to move up to the top of that range, and more reason for it to move down to the bottom of that range. Here we have included West Texas Intermediate Crude. Let's see, it broke down out of that triangle this week, but closed back above that line. Same on USO. The PMO is neutral, which it should be, with prices basically moving sideways in a narrowing range. Bonds were just crazy this week. I'm trying to get that. It broke out on Monday, hit this high and then reversed, but basically it did close higher for the week. Been solidly moving up, but it was a little choppy. Looking at the weekly chart, yeah, now this shows the range, and it closed right in the middle of that range. PMO is very positive, moving up and well above the zero line. Notice that the 20-year yield is it finally broke below this line, and with this much space before the hitting this 2016 low, I think there's still room for bonds to go higher. Looking at the yield array, this hasn't updated for today yet, but they did. I do believe they improved today, but it really had a pretty good down week for yields. And the very long-term chart, going back to 1962 on this chart, one of the things that think we should take away from this is that we're in a different environment. It's similar to what we've seen before, but with much lower yields than in almost my lifetime, and that's pretty long. But we have, they're heading lower, it appears to me, and it's from everything I'm observing, we're going to be looking at zero interest rates one of these days. Nothing that makes me happy, I'll tell you. Okay, this is the IT trend model, buy signals percent of those in the S&P 500, and they continue to drop down in, that's what, 50, 56. And this is the Golden Cross percent index, stocks, percent of stocks that live the 50, EMA above the 200 EMA. That is top and is heading lower, probably will go lower. One of the things that I covered, I was on Chart Watchers on Wednesday, and I was talking about a new discovery of mine, which it's been in front of my face for a long time, but I finally realized it early this week that we had, I was looking for an indicator that was that would give us some warning and an indicator that we could have some confidence in and we could understand clearly. And what I came up with was the percent of stocks above their 20 EMA in this S&P 500 stocks. What I think is so good about this is that they give us a very clear picture of price, where price is. It's not vague. I'll just go to another chart, come back to this one. In a PMO analysis chart, we get something similar, but this is PMO, and it's completely different. Here's a PMO for the S&P 500, and it's a rate of change. It's a moving average of the moving average of the daily rate of change, and so we can get an idea of the strength of the price index by looking at this. But it's not a direct reading of something immediately understandable, which with percent stocks above their 20 EMA, we can visualize that. We've got price is immediately above or is below, price is below the 20 EMA.
Yeah. I mean, I think that, yeah, it's not as price, oh gosh, I'm trying to think of the right word. It's easier to visualize. You're not taking a reading off of what we were saying with the PMO. It's different. But oh my goodness, it is time to close it up. So
oh, no.
I know it goes so fast. I do want to thank all of you for joining us here today, especially you, Dad. Please remember to complete the survey as you exit, and we'd like to get your feedback. We do air on Fridays at 4:30 p.m. Eastern. Happy trading.